Okay, let me know if you guys can hear me. Let me know in the chat box. Can you guys hear me? Okay. Let's go. Let's go. Yeah, how's it going, everyone? I hope everyone is good, and I hope everyone is in good spirit. It's gonna be a very fantastic week, s- especially after last week. The market wasn't so decisive. We had a lot going on, and I think the geopolitical tension in the world also makes it you know very advisable to be cautious in the market because the market is just reacting to fear right now. And for all my gold traders, I love to throw you guys so let me know if you can hear me. I'm reading through the chat box right now. Oh, okay. I guess everyone is on board now. Perfect. Yeah. Before we start, just gonna answer a few questions. I've gotten like thousands of messages about, oh, you're not posting this year, you've not posted as much. Life is in phases and seasons, right? So I've been around, I try to come online as much as possible. I love teaching, a lot of you guys know that already, but many changes happen in life. You get caught up in, so many things. And yeah, but my goal is not to leave you guys stranded, okay? My goal is to make sure I'm always here as much as possible to give you guys, a very great value, because I know how vulnerable a lot of traders are, like especially there's a lot of information on YouTube, and honestly many are very correct, but you need to make sure you stick to one that you want to be using and just, keep going forward in that line, right? So yes, I haven't been as available as much, but I intend, it's part of the plan. My first quarter of the year, I'm always busy, but my plan is to, be back 100%. And like I said, I have a whole lot coming. We're gonna have our very exclusive channel, which is just gonna be an active, mentorship and live trading, community. There's no details on that yet, but once it's time, make sure you are in my Telegram. I'm gonna announce it in there, and it's not gonna be. There's a lot of scammers on YouTube, on Telegram, right? So unfortunately for them, some of them are watching right now. The community is not going to be on Telegram. So don't let anyone scam you and pretend like I'm the one and all of that. So I'm going to announce the details once the time coming. But Trying to create a community where a lot of traders can trade together actively, and it's not going to be a signal group. I'm not a fan of signal. So if you're looking for signal, it's not for you. Probably so. If you're looking for quick money, it's not for you. And if you are not, if your style is not a swing trading style, also it's not for you. You're welcome, but it's not for you. But this is going to be a very high level trading exclusive community, and not everyone will be allowed in. Everyone that's going to be let in is going to go through screening. I want to make sure that the folks inside, they are really ready to trade, and see trading for what it truly is. And and most of the psychological, a lot of you guys know that I'm very big on psychology. So I'm going to be actively, teaching psychology in there. And yeah, I'm looking forward to that. So I think that would be a very good compensation for me not being around for some time. But yeah, I'm so happy um to be here, to just wanted to, review the market to you. And first, I would say I'm actively a GBP JPY trader, and I encourage all of you guys to find just that one pair that works for you. Don't trade every pair. You don't need a lot of vehicles to take you to a destination. You just need one vehicle, you know. So I really advise, and for me, I don't just jump straight into the chart. I like to talk to you to, just perhaps help you guys go through some things. It's not a strategy problem. Some things they're just like clarity problems, right? Once you don't have clarity on what you want to do, you find out that you are all over the place, right? So I think it's very important for me to, just bring that on board first, not just every time you're jumping straight into the chart and all of that. I don't think, you just going on the chart all the time without a plan, I don't think it's a very good plan, right? So I would say that it is very, very important that you kind of have a mental, clear workflow, just like every single job that you've done. You don't just resume your job and they just tell you you can do anything you want. There has to be a workflow attached to it, right? So if you really want to be consistent in trading, I think just pick one pair and follow that pair religiously. It is very, very important. Let me repeat myself again. Just pick one pair and follow that pair religiously. And the importance of trading one pair is, number one, it helps you achieve mastery, right? So if you're throwing one kind of kick for a whole year, the muscle of that particular leg is going to be developed so much that if you get into an actual tournament, when you kick your opponent with that, your muscle have built up so much that the impact is very high. So that is the law of intensity and consistency, right? So when you focus on one pair, it allows you to know that pair in and out. Even when you take a loss on the pair, you can easily tell that, okay, this was what I did wrong. You know what I mean? So I am a very firm, preacher of take one pair. And I want you to kind of look at the pattern with every successful traders, inclusive of myself, right? We trade just one pair. Okay, we do not take a lot of, we don't look at a lot of pairs. I've not seen Euro USD for the past 3 4 years. I've not seen GBP CHF for 5 years, right? I don't care what is going on there. I just know that I have one pair, I have one system, I have one strategy, and my job is to repeat it. It allows you to develop faster as a trader. The second thing it does for you is it allows you to eliminate multiple losses. When I take a loss trading one pair, the loss is limited to just one single loss, right? I'm not actively looking for other opportunities on different pairs just to make up for that loss, right? So I think it's very, very important for you to trade one pair. It allows your life become easier. And I'm telling you this, I've been trading for about 10 years now. And I'm telling you this, that it made a lot of difference in my trading journey. And if you followed me for too long, some of you guys have been following me since 2018, you're going to realize that as of 2018, I will trade gold, I will trade GJ, and I will trade USD CHF. With time, I dropped gold. With time, I dropped USD CHF, and I focused on GBP JPY. And when I look at my data of earnings, when I started trading one pair, it's way, way, way higher than when I used to take three pairs. So at the end of the day, the data and the numbers don't lie. So if your number says, if you focus on one pair, that this is what you're earning, this is the percentage in which you're earning has increased or your profitability has increased. And when you're trading three pairs, it shows that you take more losses, frequent trades, and all of that. I think you should stick to it. And one very important thing I wanted to talk to you guys about again is the importance of gathering data. So this is very important. And I'm definitely going to be looking forward, to discuss this more in my active community. There's the importance of extracting data outside of your trading. In fact, I will tell you as a matter of fact, the moment you have a working strategy, that's number one. The moment you have a trading system, the moment you've selected the pair you want to trade, the moment you start to trade live and you're counting your wins and losses, that moment start extracting data. You see, at a very high level, we do not trade to trade. We trade to just gather data. What do I mean? So if out of every 10 trades that I pick, I win 7 and I lose 3, and those 7 I trade, sometimes I take 1:4, 1:5, 1:6, right? I can be able to say, you know what, if I can judge my yearly projection over the year with just those 10 trades, and I say, you know what, for every wins I take, I have an average of 1:3. For every loss, it's just -1. So if I factor this into the future, looking at my capital right now, I have an idea. It might not be the precise figure, but I have an idea of how much I'm going to make by the end of the year, provided I'm trading this system and this data continue to become more consistent, right? Those are the things that they are not part of your technical trading system, but they have a bigger effect on the outcome of your technical trading system. And that is why I say the actual edge in trading is clarity. Clarity of what system you trade, clarity of the pair you trade, clarity of the data of your system. When I express the system on the chart, what does it give to me? What is the average return rate it gives to me? Once you have those clarity, that is what builds the foundation of your trading psychology. So there's no amount of information I want to give to you on trading psychology, no amount of theory or the books I'm going to give to you on trading psychology that can be more effective than knowing your trading inside out. Psychology, at the end of the day, means your understanding of what you do. So if psychology means the understanding of what you do and why you do it and what prompts the action in which you do it, that means psychology is not something you read your way into. It's something that you document, it's something that you monitor, it's something that you observe, it's something that you fetch the data of your way into, right? And that's why some of you guys have taken my course in the past. I do not have any distinctive area for psychology. Instead, during backtesting is when I teach you about psychology, because psychology is those datas, understanding the outcome of your effort, understanding that if I put it this way or I use the system, this is what I'm going to get. And when I get this is what it can give me in the future. This is how I can project into the future. That is what trading is all about. And a lot of you guys don't know the importance of what I'm saying. You trivialize this and you just, oh, okay, let me go back into the chart and just keep working. That is why you've been able not to scale. It feels like you are limited. There's a limit, right? You're not able to scale higher. So, and I will give you an example to back this up, right? Every company that you see or any big businesses you see out there, they pay a lot for data. So the question is, why do big businesses pay a lot for data if it is not important in any business? And trading is also a business, right? So your data is what actually finally puts a stability into your trading psychology. So if I know that every time I trade a system, 9 out of 10 times it gives me profitability, 9 out of 10 times it gives me 1:3, I'm not going to be expecting 1:10 from that system. The fact that I'm not expecting 1:10 and I'm expecting something realistic as 1:3 because my data over time tells me that it's 1:3 that I should expect. The fact that that expectation factor is there and it gives me an actual reality of what my system will give to me. It creates an expectation in me that I do not assume anything that is outside of what the system can deliver. And that is what we call psychology. So I think this is very important for you guys to know. So every time it's not just about what you do on the chart. In fact, at a very high level, it's about how clear you are about what you do on the chart. It is not what you do on the chart that makes you the money. It is what you know mentally and how stable your mind is and how organized mentally you are with what you're doing that actually produce the result of what you see on the chart. So a lot of you guys will say, oh, your charts are always clean, they're always neat. If I do not have a mental organization, it's going to reflect on my chart. The fact that you find my chart really clean and organized means that I've distilled everything I want to put on the chart mentally. I have an expectation, and these are driven by data, right? And that is how it is. One other important area where you need to be able to trade, not just don't trade to trade, trade to be profitable and also extract data. One other area where it is good also is that it helps you when you're taking a loss, right? When you take a loss and you know that this loss is part of the expected loss in this series of trades. So let's say out of 10 trades, you're expecting 3 losses, right? Or perhaps 2 or 3. There are some times that you might not see any loss, but the fact that mentally you've looked at your data over the years and you have an average, room for 2 or 3 losses. When those losses comes, the tendencies of you reacting emotionally to them are very, very infinitesimal. They are so small, right? But if you don't just have these data, if you don't create this expectation driven by your data, looking at the footprint of what you've done in the market, every losses to you is not going to be part of the game. It's going to be an emotional pain. And that's why those losses will trigger you to make emotional decision. It's going to trigger you to wanting to trade where you don't have to trade. It's going to trigger you to go look at pairs you don't trade because you took a loss and you're looking for money. So these are just the few, and this is a very elite level of how to think about trading. So I'm probably one of the few people who don't treat and teach psychology, because it's not something you learn by theory. It's something that you learn through data, right? So I think this is very important. If you find this very valuable, let me see in the chat. I'd love to engage you guys to make sure that you guys are following me. Let me know in the chat box. Let me know in the chat box if you guys understand what I'm saying correctly. Then we're going to get into what my expectation is for the market this week. So before while I'm waiting for the chat and just wanted to know that you guys are connecting with me, I would say for me right now, I'm actively swinging, all my trade basically, right? I'm actively swinging all my trades. I don't have time to take day trades. I'm not a day trader, right? In fact, the name of my community is called Swingtrade FX. And the reason why I'm recommending swing trading is because there's a lot of uncertainty in the market, right? And the back and forth that the market is doing, you don't want to get caught up in that, right? You want to make sure that uh you want to make sure that you just want to be a part of a trend when it starts, and you just want to just leave your market to ride and just to move and all of that. So most of the trade setups that you're going to find me give out are going to be swing trades, as you always know. So if you're a day trader, this might not be for you, but perhaps maybe this might open your mind to see how profitable swing trading is. I'm of the fair sentiment and bias that swing trading is the best form of trading. It gives you time freedom. All I have to do is analyze the market, set my alert, and when the market gets there, I execute and allow the money to work for me. I don't get to sit there in front of the computer all the time. And this is what true freedom means, right? So now, I can see your charts. Someone says, I find it valuable. Yeah, you're the best. Thank you for that. We'll follow a swing through new swinging. Oh, new swinger here. Okay, okay, okay. So, if you guys can recall, I've been giving you guys levels where you should expect the market to go to, right? And the market has really just been following through with those levels, right? And let's see what we're looking at this week. Last week I took a minus 2.7% loss overall, and this week, I'm looking forward to finding some very good trades in the market. And the beauty of when you are trading with confidence is for every loss you for every win, it makes up the loss and it gives you even 3, 4, 5 times more. Like for me now, some of my trades are as much as 1:7, 1:5, So losses really doesn't mean a lot to me, right? It doesn't cause me emotional pain, provided that I'm following my risk management. And this is where it's also very important for you to always follow risk management. So, a lot of people create an unrealistic perception about the market, but I would not do that to you guys. So I want you guys to understand that trading is boring, systematic. Trading is rewarding, is profitable, but trading, rewards discipline. I think that's the most important part of it, right? So now let's get into the market. And as you all know, at Swing Trade FX, I tell stories, right? In fact, I feel like the best way you can actually trade, in a way that is so fun is for you to always tell the story of the market. It's so beautiful. You find it very interesting. So, yes, the first thing I love to do is to come to the monthly time frame. Okay. And by the way, I can analyze any other pair, any stock in the market. In fact, I have a bunch of my closed, associates that trade gold, and I as well analyze gold for them, and that's the reason why I've been commenting on gold lately. I'm not trading gold personally right now, but am I buying gold as an investment? Yes, I'm buying it as an investment, but I'm not actively trading gold. And this is the reason why you've been seeing me throw a lot of meme on my Telegram channel on gold, right? So if you're not on my Telegram channel, you can go into the link in the description or go on the page, the home page of our YouTube channel, and click on the link and join in so that you can always get an update um on our, anything we got going on. Okay, so the first thing I want to do first is to get the context of where the market is going to. And this is the most important thing. I'm not just putting a bunch of tools on the chart, right? I want to always get the context of where the market is going to. And what do I mean? I want to know what direction I can see the direction of where market is going to, right? It's very obvious. It doesn't take any special knowledge to know where the market is going to. But I want to be able to structurally prove that, because when I can prove that structurally, I have much more confidence in what the market is doing, right? So I have more confidence in what the market is doing. So let's look at what the market is doing from a monthly time frame perspective, right? So from a monthly time frame perspective, I could see that the market has been dropping and dropping and dropping. And when the market was dropping, this right here, we could find, the market offering us a lower high, right here at this point. And ever since then, the market started to, drop again and move in an iteration of a different structure. So this is very, very important for me. So I'm just gonna, have this as the high level where the market is rejecting, from a monthly time frame perspective. And the reason why I go on the monthly time frame perspective to understand what is going on is because I want to swing, right? And I find it very rewarding when I know what the market is going to do in the next 3, 4 months. And all I do is just hop in and up out, hop in and up out. And when the market started to drop, it started to move on a structure, the lower lows, the lower high. We have the lower lows, the lower highs. We have the lower lows, the lower highs, and the market is giving me the lower low. And what happened right here? We had a change of character right here. And when that happens in the market, whenever you find a change of character in the market, that just tells you something, or change of structure, whatever you want to call it. Some of my students call it change of structure. Some of them call it change of character, right? So for the sake of folks, right, for generality, we're going to just say change of character, right? Now, when a change of character happens in the market, it gives you an idea that the structure and the trend might be changing. So now we have the slow being established, and we have a situation on the chart where we have the market actually changing its character right here. Are you guys following me? Can you guys hear me? You don't want to miss this analysis, okay? This is not just an analysis. This is a blueprint, okay? Are you guys following me? I'm just going to pause and see the chart. I want everyone to let me know. Let me know if you can see what I'm doing. I want to make sure everyone is seeing it. Seeing it. Okay, okay. Okay. Beautiful, beautiful, beautiful. So now that we have a change of character, right? And I'm going to give you guys some levels into the future, okay? And you can come back and let me know if the market will hit those levels or not. So we have the market of orders, a change of character here. And when a change of character happens, there's definitely bound to be discounts in the market. And that's why you see the market came back to this discount level. Sometimes it could fall on, Fibonacci levels and all of that, right? So we have a discount level right there where the market is reaching back. So this sort of makes sense for us. And so now that we have those discount level, you want to be able to definitely identify that level out as this the discount level, right? You want to tell a good story. And these are the discount level when the market is rejecting. So now let's go back to the structure, right? When the market gave us, the lower lows and the lower highs and lower lows, lower highs and low change character right there, or change structure, the market gave us this discount to this level, cannot sustain, they came back and gave us another discount to give us like a double bottom right here, and the market has been making the move to the upside. So this sort of like makes sense to us because now we can see on those levels where the market was rejecting from, right? So now that we have that, that only confirms something very easy peasy, right? That the moment the market rejected that level, the next level from a monthly scope, from a monthly time frame scope, is that the market is going to 250 level. So you can have this down. The market eventually may not be the end of this year. It may go into next year, you know, but the market is definitely eating the 250 level. That's where the market is going to. So it kind of makes sense, right? but we are retail traders, right? We are not position trader. If we were position trader, we would have been taking this trade since 2020, right? Just adding position to it. But we are not. We are looking for the next available opportunity in the market. But if we don't know the story of where the market is going to, or where the market is coming from, we cannot be able to tell the actual story of the thing the market's going to do next. So now that we know that the market is going to the 250 level, I want to look for immediate level. Remember, I'm not really operating with the macro data. I want to just get like the key levels that the market might be coming to near term. So one of those level is this level right here, right? So we have this first target, right? So I'm just going to say, call this the target one on the monthly time frame. So I have this level where the market is coming to, but for the sake of clarity on people that are watching, I'm just going to use literal words for that. So we have this next target where the market is coming to, right? So these make sense right now, right? And then we want to add some, basic information to say, you know what, when the market rejected, these levels right here, right? The market broke above this high level right here, offering us a break of structure right there, which further, buttresses our confirmation for where the market is going to. So here we have the break of structure. We have the break structure, and the market, you can see the market broke the structure, retested, and the market has been making a push to the upside. So when the market broke that structure, what do we have? We have a situation that after the break of the structure, the market pulled back to, a Fibonacci level and continue to go back to the upside. So this is what I mean. After the market offered us this break of structure, we have the 61.8 level. All of this level rejected the market, and the market continues to go to the upside. So I think it's very important for us to identify those Fibonacci level out. So all of this, we're just trying to, uh, we're just trying to build a case in the market. So now, so one thing that you should always do is to take a pause when you are analyzing the market, right? And just tell the story. So if I want to tell the story of the market right now, what do I know? The market is rejecting from this high, the market got to this low, the market changed this character or structure right here, offered us discounts right here. This discount went on to breaking the structure right at this level. When this last high got broken, that structure right there, the market gave us a retest back to the Fibonacci level. And ever since then, the Fibonacci level is sending the market back to the next target. Do you guys understand this? Does this look technical? Let me know in the chat box, guys. Does this look really technical? It is not. You're just telling the story of the market, and this is how you want to trade with clarity, right? So now what I want to do on the weekly time frame is just to go on the weekly time frame and understand what the market is doing. It makes perfect sense to me that after the market had rejected, all of this fib level right at this point right here, the market rejected all the fib level right at this point. What did I say? It's very simple. When the market broke the structure also, right, the market started to retrace back to the downside. And then this retracement changed structure here at this point as well. Offered us another discount, and you can see how the market was making the push to the upside. So that means after the market rejected this fib level right here, guess what? The market took out this high again and offered us another break of structure, right? So are you seeing how all of these stories connect? So the market offered us another break of structure right there, which tells us that what the market is the next target of the market is going to be the 216.115 level. However, there are specific zones in the market where the market was just finding this very strong bullish moves in the market. And that is all of it, right? So now what do we know for sure, right? On the weekly time frame, we see the break of structure, and my goal on the weekly time frame is just to find a specific and strategic level where the buyers are getting into the market. So what I could find, which I could see as the most important level, is very simple. I could see here that after the market broke the structure, the market retested this level right here. The market tested this level. And from this level right here, you could see that the market started to make a very strong move to the upside, right? So my goal is just to keep finding those specific levels where the market hit and start to push up in the direction of the trend, right? So why is this very important? I want to know those key levels in the market where the market is giving me more bullish injection in the market. Perhaps if I can obtain those levels, I can use it to also be able to predict the future levels where the market is going to give me some sort of retest, right? So it becomes very easy and it becomes very straightforward in that way. And also, one thing I would love you guys to see is that after the market broke that structure, you can see that it retested the tip of that structure, which we're going to get into on the daily time frame. So now, you can put, whatever it is right there, the momentum, or you can have a higher low in there where the market kind of gave us a keys and the market continues to push up to the upside. So you can see how we've been distilling the market, right? What we're doing is called, we are distilling the market. We're making sense of the story. We know where the market is coming from so far. We've traced its footprint to where it is right now. We know what it has done so far, and we just want to make decisive, action, take decisive action based off of that. So from a weekly time frame standpoint, what is the story? The story is very simple. After the market broke this level from the monthly time frame, just let me bring it out so that we can understand better. So after the market broke this level, right? Just give me a second. Yeah, so one thing we know is after the market broke this level from a weekly, on a monthly time frame, the market went as much as to this high, formed a retest right here, changed the structure right here, retraced back down to this level, first broke this level, found more buyers pressure right here. This more buyer pressure led us to the market breaking the next high. So it kind of makes sense how we are just kind of distilling the market. So the most important information on the weekly time frame is after the market broke this high to this low right here, it went on to breaking this last high. And that means this break indicates something that the market is going to the next target, which is 216 level. And usually on the lower time frame, these levels are a lot of pips in the market, right? So now let's go to the daily time frame to go see what is going on the daily time frame. So on the daily time frame, recall I told you that we have this previous area of support, of resistance turned into support. So you want to keep that into account. And some of you guys that were on my Telegram channel that saw when I sent a signal, not a signal per se, just what I'm looking at. Some of you guys would have seen me take my trade from this level, and I kind of closed when it was consolidating right at this level. So now that I'm doing this analysis, you kind of see the reason why I did that analysis right there. So on the daily time frame, we have the market reacting to this level, previous area resistance, turned support, right? So what does that mean? After the market actually found those bullish pressure right here, the market broke this structure and it went as much as to this level, but the market hasn't gotten to this point. We need the market to get to this point. So usually the force the market needed, now look at this, right? The force the market broke this weight will not get to that level. So that means we have to find a pullback before the market continues to push in the direction of the trend. And this is the textbook example of what I usually would teach as the push exhaustion cycle, right? Push, exhaustion, push cycle. So that is literally what you're seeing the market doing right here. So when the market got to this level, previous area of resistance, right here, turned into a support. It's no brainer. It's very super straightforward. And you can see how the market also give us some sort of like correction, after the market got to this high peak. The market formed into like a zone of resistance right there. We have all this resistance zone. It could not take this level. Now, when the market could not take this level off, it went on to form into a structure right there, broke this structure, gave us a change of structure, but came in to bounce at the previous area resistance, turned support right here. So that's what I want to see. Now, what does this tells me? This tells me that when the market decides to reject right at this level, where are we going to? It's time for us to get to this level, right? So we are definitely shooting for the 216 level on the current move that the market is going right now. However, sometimes we love to keep it safe, and you want to take your profit at the next high. So sometimes a lot of people use this for like TP1, you want to take a profit or full take profit right on that level, or you want to buy into the next, targeted level. So now it seemed to us that we know the most recent pressure where the buyers got in, right? Before it used to be this level, but now we can see that the market turned the previous resistance, it turned it into support. So we know exactly where the buyers are getting in. And the second information is we know exactly where the buyers are taking the market into, right? It's first coming to this resistance 215.077 and 216.004. So now the question is, where do we execute and how do we join this moving, very profitable moving trend? So now, because you know where the market is going to, right, and where it's coming from, doesn't gives you the right to execute into the market, because at the end of the day, you are risking a portion of your account based on certain stop loss and or pit value to execute. So this is where you want to be a little bit detailed. You want to have a detailed understanding of what the market is doing. So you don't just want to jump into the market. You don't just want to just rush into the market. This is the point where a lot of traders gets really excited and, oh, I think I know where the market is coming from. I think I know where the market is going to. So you want to be a little bit careful, because anywhere from the 4 hours time frame, these are the most important time frame, because this is where you kind of want to make sense with those information, because there's no point having to have obtained this information and not knowing how to convert this information into results on the lower time frame. Remember, our goal is to trade the retail world, but to see the market from an institutionalized way. So we know where the market is going to at the top. We know where the market is coming from, right? And if you followed me just 3 weeks ago, I sent, a trade, to the upside, which I closed somewhere around this point because I wasn't feeling this trade anymore. And last week, the market went to push into the higher. So the question is, this week, is the market going to push even way higher? And if the market is going to push way higher, where do we join the trade? And this is where a lot of traders actually get it all confused. So for us to be able to understand what the market is doing, we need to be able to distill this retracement, right? So the market got to this level, right? What do I mean? The market got to this level right here, came back to this level, and is making a move to the next level. So for us to know where to join this trade, we have to know exactly the structure that formed into the setup as the market pushed in the direction of the trend. So perhaps if we can have this knowledge, we can be able to join the market at the right time so that the market will continue to push us in the direction of the trend. So for you guys who have not been able to join here, some of us joined right here. We got up right here. So the next thing is, at what point do we join this train that is already moving? We know where the train is going to. We know where it's coming from. It's very simple and straightforward. All you got to do here, okay, is to look at the structure of the market and say the market started to move on lower lows and lower highs and started to move in a different structure again. And this is very key, right? The market, at some point, we had this previous area of support, and the market, notice how the market reacted to it in the past, right? Previous area of support right here, and the market reacted to it. And after the market reacted to it, the market starts to, move in a consolidative structure. So this is one thing that I want you guys to learn. Many of you guys just say, oh, the market is consolidating. I'm not going to look at the market. That's a very big fat lie. I don't know who taught you guys that, but even within the consolidative, move, you can still identify the structure. So what does it look like? Lower low, lower high, lower lows, lower high, lower lows, lower high, previous support and resistance. The market started to move on consolidative move. It offered us a change of structure, reacted to the Fibonacci level, and the market pushed below. So when you bring your Fibonacci right here, it tells you exactly the reason why the consolidation broke to the downside. And when the market got to this level, remember, this is our strong zone of the buyers, injection. And you can see how the buyers pushed in the market to the upside. What did the market do? The market broke the structure right here. When there's a break of structure, it's indicative of the fact that the structure wants to change. We found this pullback and the market completed this move, right? Where the origin of the consolidation right here to this level, the market came back into that level and it completed that move. And that is exactly the reason why you would see that reaction right here, meaning that I respected this point after the market turned the previous area of support into resistance. Consolidation happened, and that consolidation changed structure. It broke above it right here, and it respected that level back. And when it respected that level back, of course, that level could not send the market back into that consolidation anymore. It gave us a reaction and it broke above. Now, this is where the market starts to get very interesting. So this is the most significant lower high before the consolidation got into the market. So the moment that level got broken, right, it means that the structure to the upside has literally been changed. So a lot of you guys would have made a mistake and say, you know what, this is the break of structure right here. You got to be careful. You have to understand structure. And this is the reason why I think one of my favorite things to teach the student is to understand structure and to understand how structure works, right? I think it is very, very important. And I think, unfortunately, we're going to take our cost down. It's no more valid. And we're kind of just changing our direction of where we're going with Swingtrade FX. We realized that trading actively and having those active mentorship, just like we're doing right now, helps students to learn a lot more better than just having them, just studying and studying and studying. So unfortunately, things like the boot camp, I'm not sure we're going to be doing the boot camp anymore. I'm not sure like the course is going to be live. So for people that are looking to join for the month of March, this is the reason why we haven't really responded to those requests. And yeah, there's not going to be boot camp anymore. So any of those events that we're going to do, that we do on Swingtrade FX, will be done exclusively within, this conclave that we're creating, right? So we want to create a tribe, a community, right? And I think one of the very first thing that you'll find me teaching there is structure. A lot of you guys think you understand structure, but you really don't understand structure because there are fundamental principles to structure, right? Structure is not just, oh, it's going lower low than lower high. The best I could say right now is that structures move in iteration. What do I mean by iteration? The market is a combination of smaller structure, turn into bigger structure, smaller structure, again, turn into bigger structure. This is how the market moves. So if you understand the science behind this movement, it's very easy for you to filter through the noises of the market and say, you know what, this is not the correct structure. This is the actual correct structure. So for example, if I was going to take a trade right here, this would have been the trade I would have taken right here. This level being the point of interest, break the structure, discount. This is where I would have exited this trade. Just right beneath, when the whole consolidation started from. Then when the market retested this and broke above it right at this level, I would have imagined that the market is broken into a new structure cycle in the market and the market is going up. Just this small explanation, honestly, can make a difference in your trading, right? But that's not what I'm talking about today. And if you are still very new to the concept of structure, honestly, I gave a free structure masterclass on YouTube, which is one of our video that has the most view. I did that based off of requests of what people want. So you can go to that structure. Most people have really just changed their trading trajectory through that structure. So it's very important. Um, and what I'm doing here is not just analyzing, I'm teaching, right? So if I was actually analyzing, it takes less than 3-4 minutes to analyze. But I want to teach you guys so that you guys can see, what I want you guys to see. So right here, when the market broke above it, this is when we officially have the change in character. And you can confirm that because when you come back to the 1 hour time frame, and kind of put the market on a line chart, you could tell that this is the previous area of support that turned into a resistance right here. Then the market went into this consolidation and finally it broke it. So this is exactly what I'm talking about. Now, how is this very relevant for us this week? So when the market pushed out this change of structure, what we could tell right here is that the market started to move into a new structure cycle. So what do I mean? After the market gave us this higher high, higher low, the market went for this break. Then the market moved another iteration. The market retraced back to 61.8. And all of this has been moving on a single trend and alternatively a single structure. So what does that mean for us? It means that at some point, when the market gives us a change of character, expect a discount to happen. We have to get that discount back. The market has to grab that balance back before it starts to push to the upside. So now we saw that last week the market was rejecting. We saw that the market started rejecting right here, which gave us an indication to the fact that the market might be offering us a discount to this lower point. So I don't expect the market going back to the upside. If the market does that, perhaps maybe I'm not going to be in the market. But based off of data and based off of repetitive and systematic pattern, I would expect the market to give me a drop down, which is going to be more of all of this move right here would drop down into a whole single retracement right here, then I can continue to have that push. So that means the market might be offering me a sell opportunity in near term, at the same time, a buy opportunity when that happens. And they are really looking so rewarding. So now the question now is, now that the market was moving to up to this level, right? What are the different, why, the question is, why did the market drop right here? It's very simple, right? When you bring out your Fibonacci out, you could tell right there that that level was a Fib level right there. So this is the maximum level that the market got to. At first look at it, it started to reject the 61.8, broke above, went to the 78.6. So remember, these two level right here is our golden zone. Maybe I'm going to give it a nickname, right? But honestly, those are our golden zones. So you kind of see where the market is rejecting from. So this kind of should make sense to you that the market is not moving randomly. So you can see that the market doesn't move randomly. So after that, what happened? We saw this break of structure right here. The market started to move this break of structure. And personally, I believe that the market is going to offer us a retracement right here to the Fib level, at least this level, or maximally to this other level. But if I want to play it very, very safe, I would just find a level right here for the market to, retrace back into, and say that I would expect the market to move back into anywhere from this zone, all of this zone right here. So what am I saying right there? Some folks must have entered from last week, and this was the level where the market kind of smoked us out last week, right? So I would expect some folks to have entered last week, but then after the market changed that character right here at this point, I should expect, some sort of like retracement back to this level, and I would expect some push to the downside. Then I could take that trade, perhaps 1:6, 1:5, then I can continue to buy up later on. So this is what I would be expecting, in the market. So let me know, guys, if you can, if you're understanding what I'm doing. Let me know. Let me know. I'm just gonna take a pause here. I'm just gonna take a pause here. Are you guys with me? Are you guys hearing me? I can't hear myself, so I want to be sure that you guys hear every single thing I'm saying. Are you guys following? Are you guys feeling the story of what we got going on? Trading is fun only if you can tell the story of the market, okay? Don't make it overly technical. Don't make it overly technical. So now this will be an initial target, right? Remember, I said the market moves in iteration, right? So for me personally, I'm looking at the market dropping down into, this level right here later on in the week. Yes, I know that the market hit this previous area resistance on support, but like I said, I focus on macro data, right? I usually would focus on macro data, and I'm not actually interested in the fact that the market is dropping to this level. A lot of people, would assume that the market is going back up to this level. Yes, the possibility of that is there, but I'm looking at the macro data, right? So the macro data will always from the micro data, right? So with that being said, this is where I'm looking at. I'm looking at the market giving me some sort of like pushback to this level. And if the market could test this level back right here, I will be looking at finding, a sell here in the market. And sometimes the market could come as much as to this level, but anywhere from this zone, I'm going to be looking forward to execute the trade. And, 1:5 is just enough for me. I don't have to take the market. I don't have to take all the move to the down part. I'm just going to do this in the market, and I'm out of this trade. When the market gets here, I will update my analysis, and I'm going to be looking forward to finding another trade opportunity in the market. So this is what I'm going to be looking at personally. I believe that the market will come for that retest. I believe that the market will offer me that opportunity, and I'm going to be taking that with no hesitation. So this would be my first outlook for the week. And again, I have to say this to you guys, right? And for some of you guys later on, you can text me. On Telegram. Join the Telegram, click on contacted me to make inquiries about what we got going on. But I'm gonna officially announce maybe by the end of this year. Sorry, by the end of this month. I usually take my first quarter of the year to myself, but from now on, you're gonna see me more active analyzing on YouTube, and just, the sky's big enough for all of us to make money. So, but the most important thing I want to say is that now this is the point where you kind of just have to wait to see what the market is going to do, right? So, like I said, I'm focusing more on swing trading. And let me give you guys one hack, right? You don't need a lot of trade to make something really great in the market, right? The beautiful thing about my system is it offers me like 1:5, 1:6 for most of my profitable trades, right? And it just minimizes the effect of losses, right? And honestly, in a week, you just need one good trade, and you're building consistency is enough to get you in a week. Say, for example, even with an account as small as $500 or $200, you just need one good trade in a week, and perhaps 4 to 5 trades in a month. But when you look at the rate of return of those trades, right? If you have trades that are offering you 1:3 consistently, 1:4 that are much more stable, instead of going to the lower time frame and just trying different trades and everything, right? I think it is very important that you stay more on the stable time frames, right? I can still take this to the lower time frame, but guess what? It's a lot of information, right? So my goal is just to distill the right data, the right information into the market, and wait and see what the market does with respect to that level. And like I said, I am a serial swing trader. My goal is to look for those critical level in the market where the market will give me the reaction. So most of the time, the kind of the trader I am, you will find me at the beginning of this entry the trade, or at the beginning of this selling the retracement, or at the beginning of this, just like you're finding me right here at this level, looking for to set the down part. I target specific key levels and I join the market and I follow the direction of the market. And I encourage you guys, right? This is the best way to trade. This is the best way to trade. Don't always get into the market to take random trades. And once you get used and familiar to this system of trading, or just to trade in such a way that you tell the story of the market, it becomes way more easier for you even as time goes on. So yeah, this would be all for today. And let me know if you have any questions. I'm just gonna answer, I'm just gonna answer very fast. I'm reading through your comments right now. Let me know. Do we have any question here? Let me see. Let me read through the chat box. And also make sure that you are subscribed to make sure you are subscribed to our YouTube page, because you're gonna see more of me in the second quarter, right? Just stay on it and you're gonna find me in there. So let me respond to some of this comments. Someone says, I always love your teaching, you're the best. Thank you, man. Someone says, I love your teaching, you reach to my understanding. Thank you. Thank you. No questions from my side. Looking forward to your community. Oh, that's so good. That's so good. Yeah, I'm gonna give you guys the announcement on Telegram, so you can join my Telegram channel from here. And I dropped this on YouTube so that you guys can always come back to watch it again and again. Okay, let me see some comments coming in. Let me see. And if you take this trade, send me some screenshot. Let me know that you guys are eating alongside as well. Okay. Someone says, my question is, why don't we sell down the initial higher low? The initial higher low? I really don't get that question. The initial higher low, I'm not sure I understand that question. Someone says, which is more efficient? Um, is it buying a prop firm account using money just to trade? I will always advise you at all times, use your money to trade. The prop firm are not there to enrich you, okay? They are creating rules that literally, the rules that prop firm trading creates is supposed to get you psychologically destabilized, right? But when you trade your own money, you know you're in control, right? So that is that is gonna be my advice to you. So two more questions and I'm gonna be out. Two more questions and I'm gonna be out. Two more questions and I'm gonna be out. Yeah, so this is what it's gonna look like in the conclave. I'm gonna show up every day. Someone says Telegram link. So I'm just gonna just go on Telegram. Let me see if I got something in here. Telegram link. Very straightforward. Go on Telegram and look for Swingtrade FX. As you can see, this is going to be our Telegram link, t.me. Let me just copy it right here. Copy link and let me see if I can share it over. Let me see if I can share it over. Let me see if I can share it over. I'm not sure if I could share it over to you guys, but Yep, yep, yep. There we go. So you can see our Telegram link in there. Okay, so we're just gonna watch this trade play out, and once the market is done, best believe I'm gonna be buying back into the 216 level. So this is what I'm gonna be looking out for this week. And those are the two trades, provided the market moves faster, that I'm gonna be taking. So I see you guys, and make sure you stay in touch on Telegram. And I'm going to be dropping more information right there, and perhaps next week you're probably going to see me here as well. So we're locked in. So if you know that you've not been locking in, this is the time for you to lock in, because I'm going to be on here perhaps every single week. And yeah, I'm going to give you guys the detail very soon. This is literally what I'm going to be doing in the conclave. We're going to be deep diving, honestly, deep diving. So rather than just talking about the structures, I'm going to show you practical examples, and always tell the story of the market. Don't be overly technical. Be psychological when you're analyzing your trade. I wish you guys the very best, and have a wonderful rest of your week.